Yo, what's going on, coin traders? Thanks for joining me for the show. Looking at Near Protocol, NEAR on that ticker, and actually posted earlier here over on Twitter or X this chart setup talking about how good it was. So do want to do a video and pretty much talk about all the things we're looking at with this chart setup and pretty much showing our expectations here from now. And so if you're not currently following me here over on Twitter or X at coin_trades is the handle, do make sure you drop me a follow over because we do drop a lot of charts and setups and different things like that. So looking forward to having discussion over on Twitter or X with everyone. So looking at this chart, first of all, right off the bat, the main setup right now, you might not necessarily think is all that great. And especially because right now we're looking at another bearish one. We are looking at exponential moving averages that are starting to cross bearish. So we're not necessarily thinking that we're gonna see a complete reversal and new all-time highs here. No. What we're actually thinking is that right now, this is a pretty good opportunity to see a nice little short bounce trade play out. So do want to start off talking about several of the key levels here. And right now you can see that over the last couple of days, we've had a lot of these nice lower downside shadows on this candle. And in fact, if we go ahead and zoom in on the candles from the three most recent setup days, if we actually look at closing level of support, you can see at 2642 coming in. So we do have a lot of shadows over these 3 days, dipping below this level, but maintaining a close each day on top of that level. So now looking to defend it again. And obviously, if we do see a close below this, that will be one of our downside risks and probably will be looking at farther downside continued action from there. But right now, yeah, definitely going to be looking at this area as support. Looking left as well, a big point of closing support now as well because it was previous closing resistance here over back at the middle start of December here. So rejection coming from 2533. And then you can see that's where we had a lot of these lower shadows happening. So a very strong supportive zone happening that has been confirmed and back tested several times. In addition to that, if we actually go ahead and zoom out here, what we're looking at is a big point of previous resistance over here. So a lot of previous resistance as well. And so especially with the candle that we had that actually just blew through this whole zone and annihilated it, we know that there is a very strong move to the upside. So back testing this is actually a pretty good sign and a reason that we do like setting up these resistances and actually consolidating before seeing a run up. We've talked about this several times on the channel, and that's why when we do see these consolidation zones and actually a period of prolonged delay before the next move to the upside, that's a good sign to see a back test of that level and have that be that additional support. So additionally, if we actually want to turn on VPVR, volume profile, visible range here, you can see that we are actually sitting on the downside, big point of mass for support. So ever since hitting our current trend high right now, coming in at 462, we do expect a lot of downside pressure just due to the amount of upside that we have seen in such a short time. So now especially starting to see some slowdown on this overall supportive level. So big point of mass right now is going to come in right at the 234 level. So we still could potentially see another leg down to test this side. And if we do draw a line, for example, looking left, you can see big point of resistance as well before we actually started to pull back, finding our current trend low before this nice rally and move to the upside right now. So we are looking at a pretty supportive level to the downside, and if we actually take a Fibonacci retracement from the current low right now up to the current trend high, then what we're looking at is the downside support. And if we go ahead and look at Fibonacci's and where they intersect on this VPVR, you can see that they do start to align pretty much right with the 61.8, which is one of the golden retracement levels. So like we said, price for that down to 2368. So in the current trade right now, that is the second point of entry. Probably put the entry a little bit on top of that at around 2387 or so. But first position has already been filled on this nice big zone of support. So we are looking for a little bounce here. But if we do get a pullback and a second fill on another position, lowering our average, then we will start to scale out on the way up to reduce the risk of that trade. Now, I do want to pull up some of the technical oscillators here, looking at the RSI and stochastic RSI first. So pretty low on this daily stochastic, or excuse me, the daily relative strength index RSI. And if we look left, it's been the lowest we have seen since coming in right before a nice big move middle of October that started this nice upside rally. In addition to that, if we actually also look at the stochastic RSI, now we are smashed up pretty much right at the zero line for both K and D oscillators. So you can see not quite the full 0, 0.06 and 0.02, but about the lowest that we have seen, especially with the longest delay without actually a bullish cross. So we are pretty much needing to see this daily stochastic RSI have that bullish cross and roll over, and then see this upside ultimately favor out, as well as, like we expect, we could potentially, especially if we do hit some of those downside targets, could end up seeing this daily get overextended. But right now, I think that's not necessarily as likely. And if we actually flip on over to the 12-hour chart, you can see that we already were in that oversold level. So very strong bounce potential here, especially coming in at an RSI 23.31. And we know that typically in an uptrend, RSIs that are oversold are a lot more strong of an indicator of that reversal compared to when we are in an uptrend and we do see overbought. It's the same thing that we do see in a bear trend, where we do see RSI to the downside and overextended and oversold being less relevant than when we do get a little rally and pump, having that overbought indicator be a lot more relevant and reliable in that instance. But now, while we are looking at this RSI, I do have to zoom in here and point out potential for a flag type pattern that we could end up seeing. So with all this pullback, could see a flag kicking off these exponential moving averages and rolling over. So that is why it's going to be important to actually start to scale out on this trade to the upside, reduce that risk, and then also reduce that break-even point. This is one of the topics in a trading math video I am thinking about making, or even potentially an online course talking about this type of trading math, since I know most content online typically covers technical analysis and chart setups like this, but there's not really too much of a deep dive on the information about managing risk and also about the fundamentals of how to actually mathematically understand trading and all of that. So if that does sound interesting, drop me a note in the comments sections below and let me know what you think. But otherwise, yeah, so while we are on this 12-hour chart, I want to turn on the actual time-based volume down here. So what we have right now is actually a peak and climax right now for the bear volume that didn't come in necessarily all the way at our low. So we're looking at a low right now coming in at 245. And especially you combine that with a decrease in the overall bearish volume, as well as an overextended RSI and stochastic RSI that could lead to a little bit more upside pressure. But like we said, we do have to actually see whether or not we can pull back, maintain a higher low, and then start to change the trend on the shorter term charts, especially since we are overextended on the longer term. Now with a chart like this, and it's more apparent actually in the daily and longer, that because we actually have so much consecutive bearish sell-off days, we know that especially in a swing trade, this will actually play out. So we don't have a short time frame on the charts just yet, but do still need to make sure that we're talking about the upside overhead resistances. And so for that, we're actually going to see the first one coming in pretty much right around 292. So this was a big point of support here before actually pulling back to our current trend low. Looking left as well, a big point of support on the shadows, and then looking left as well, a big point of closing resistance before finally breaking up to our current trend high. So in addition to that, on this 12-hour chart, we are also going to see these exponential moving averages start to drop down. So combine this with a price level resistance as well as this big point of exponential moving average resistance, we could see this shape up into that flag pattern like we were talking about and test some of those lower supports. So if we do get a downside lower support, I would expect targets to be coming in at about 240, just below that at 2398. And then potentially to the downside below that, we would be looking right around the 214 down to the 213 level. So plenty big zone to the downside to find support and additional entries if in fact we do confirm the next leg of downside action. Like we said, still not oversold on the daily just yet, so would expect and anticipate this does have potential to see that, although even if we do see a bounce from here on out, that would be a good setup as well. This is why it's so important to actually have setups in mind and potential scenarios so that way you can plan out a trade with having both the best profit as well as the least risk potential. Now, one thing that we do have to do and be mindful of is just how the Bitcoin chart setup is playing out as well, because this isn't necessarily the best setup, especially since we're about to be getting a full daily bearish flip on these exponential moving averages. So confirming those then again as resistance. And this will be the first time actually that we have seen a bearish flip ever since coming off of the trend that started the low here and actually forming a full bullish formation. So since we have actually exhausted that and set the bearish precedent now, that is helping to confirm that the top is in, and it's extremely unlikely right now, especially given the momentum and the lack of upcoming news and excitement, that we are going to be seeing a new all-time high coming in here and then in the near-term future or anything, I would expect. And we have been calling on the channel and over on Twitter for a longer-term sustained pullback here, which would be better opportunities for lower entries for a longer-term rally. So again, looking at the upside, this isn't necessarily the best setup for a Bitcoin right now, especially with a lot of overhead resistance due to a lot of these previous support levels just getting smashed on this candle that we had for Bitcoin on the 22nd. So between price levels and the looming bearish cross on these exponential moving averages on the daily, we're not necessarily expecting a lot of great bullish things. So probably we will see Bitcoin maybe rally up to about 41,000 at most, and then likely pulling back for a sell-off as well, before probably eyeing a target somewhere right around 37,900. So why do we bring this up? Well, we know that with all altcoins, we do see a little bit stronger of a sell-off with altcoins than we do for Bitcoin. So if we do see direct sell-off for Bitcoin, we know that that will impact the altcoins a lot more. So we do have to be mindful of that and how that could actually impact this trade right now, if in fact we do continue to see a little bit of longer sustained pullback and sell-off. But now I do want to flip over to the 2-day chart here for Near Protocol, because right now we are still finding closing support on top of this 50-period EMA. We are getting a very close potential of a bearish cross on the 12 and 26 EMAs on this 2-day, but otherwise still maintaining the closing support on top, as well as looking left, big point of resistance as well. So still maintaining strong support for the EMA as well as price levels. And so if that level does in fact break and we do see a close below that, then that's going to be an extremely bearish sign. But in that instance, we probably will see a little bit more of a sell-off for this RSI Relative Strength Index. Now, while we got the oscillators pulled up as well, very oversold stochastic RSI, so we do have to have some upside pressure and a bullish cross on K and D lines down here. And so that's why I do expect a little bit of an oversold bounce and probably a bit more maintaining of the support level. But like we said, if we do in fact break it and we do see more bearish volume come in, that would be a bad downside sell pressure, especially given the fact that on this 2-day chart, we can't see multiple consecutive bullish days coming in. So it has been a majority of sell-off action, but we have seen a decrease in that overall sell-off volume, showing its exhaustion on the point of the bears and sellers. Now, like we mentioned, we are still very much in a daily downtrend, so we're not expecting, like we said, to come up and see new all-time highs or trend highs here, but we are expecting a little bit more of an oversold bounce, which does make this more of that appealing trade opportunity. Switching over into the weekly chart now, looking at the current setup right now, one of the things extremely notable is that this nice big bullish candle, it actually has been taking so far about 5 weeks to not even get completely all the way down to where this weekly candle started. So one nice week of bullish upside has been taking the bears, with decreasing a bearish selling pressure over here on the bottom, we can see, in order to be able just to retrace. And so even if we look at the current zone right now for weekly closing support, big closing resistance was found at 2585, all the way up to the previous level of closing support for the weekly at 2981. So if we do get a bounce, we could actually see 2981 be that upside target. So from current prices right now, upside target for that would be about 11, almost 12%. And especially right now are finding closing support so far, although we do have about 4 days left on this current candle. It has been found right now so far on this 50-period weekly EMA. Now, technical level below that would actually end up coming down to about 233 here, potentially all the way down to around 2.25. And so I would expect, even if we do see a little bit more continued sell-off pressure out of crypto and near, that would be the lowest point of support that we would find before an actual rebound. So that will be our lowest entry point, because right now I'm not considering the potential that we're actually going to see a longer sell-off here. So we are in a swing trade, not necessarily a day trade. So we are going to play out this on an overall bounce. So likelihood right now, in my opinion, of a risk of just a continued sell-off without actually a bounce to let us out of the trade is extremely low right now. So that is why we are starting to fill up and make moves and plans on this whole way down, because when we do get our bounce, we sell out on the way up to lower that average, reduce the risk, and also plan for a potential lower high and a retracement to see a new lower low if in fact that does play out. Looking at VPVR on the weekly here, just to reiterate once again, we are seeing biggest point of mass coming in just above 2 1/4, so would expect a lot of slowing pressure for selling, especially since we have seen a decreased weekly selling pressure as well. So that's another reason why we are expecting at the lowest point this to be a very, very nice point of support, especially because if we do look left here on the weekly, we could see big points of resistance happening on these 12 and 26 EMAs before finally flipping it. So we do know that from the current EMA down to the 26 weekly EMA, just right around 2 1/4, very supportive level as well. So this overall zone, although pretty big still, we could be looking at sell-off potentially, come on, of right around 15-16%, would still have plenty of upside potential. So even from that point, the current trend high would be over a 100% gain. But like we mentioned, right now we are looking mostly at the longer term chart, so that does mean it is going to take longer term to play out, so we're not going to be in a huge rush with this trade setup right now, but keep monitoring it and have our expectations met. But as always, would love to know everyone's thoughts, comments, predictions, feedback in the comment sections below. Do love getting back to each and every one of you, and don't forget to reach out over on Twitter or X at @coin_trades. That is going to wrap it up for now, though, so do appreciate all the continued love and support. As always, it does mean so much. Stay safe, take care, everyone, and I'll catch you back in the next video.